Aloha and good morning. This is Clint Hansen with Maui Luxury Real Estate, the Maui Real Estate Radio Show. This is listening to us on Monday morning, 7 a.m. at 11:10 a.m., 98.7 FM, 96 FM, the KAOI radio group. Today we have my co-host, as always, Byron Yap with the Axia Home Loans. And we also have special guest Jason Hall with Rapid Rescore Credit. You can go to his website at rapidrescorecredit.com. But before we get into the show about the importance of building your credit and how Jason can help you, I wanted to talk to you a little bit more specifically about mortgage rates in general and where the rates are at today, because that's kind of the pulse of the real estate market, is finding out where we're at. Byron, how's it been lately? Have we
Good.
seen them eking up?
We've yeah, so I guess the rates have been kind of inching up, going back down. They've been hovering around the 3% range for a 30-year fixed, and it seems like there's an uneasiness of whether it's going to go up, whether it's going to go down. It's kind of been all over the board. One day it might go up a quarter, next day it might go down an eighth. But it's been hanging around the 3% range. So it's still been a good market for rates.
Still dramatically lower than what they've been nationally over the past 10, 15, 20. This is some of the lowest they've been in decades. So it's still a really good opportunity. And that's, of course, one of the things that are triggering a lot of the buyers out there is the low interest rates. But there's also a lot of different loan programs. Most people go into a loan, with 30%, if they can muster it. But with the large amount of people coming in cash right now, and the variety of loan programs available, you can actually do it with less money, sometimes 3% and no money down. Can you tell us a little bit about some of those loans?
Well, we still have, they're still out there, the first-time home buyers loans, which allow qualified customers up to 3% down. There's different USDA loans. There's many options. There's actually a lot more options nowadays than there was before. And so I would recommend to anybody, whatever loan officer they work with or company they work with, they go speak to them to decide what program would best fit their needs.
No. They're supposed to call you, not whatever loan program.
But sometimes people, have a preference, which is understandable. They have a friend or a family member that could help them also. But definitely, we'd love to speak with them if they want to.
So that being said, what's the website you want to have people go to at Axia Home Loans?
Basically, it's just axiahomeloans.com, and they can look me up /Byron Yap, or they can send me
AXIA, right?
Yeah, AXIA homeloans.com, Byron Yap, or they could send me an email at byron.yap@axiahomeloans.com.
How's the transition been to your new location? Because you were at a previous place and you have lots and lots of experience there, but you made the decision to move to your new place because of some of the loan programs they have available. How's that process been?
Been good. It's been a good initial learning experience coming from a smaller lender going to a different national lender and having to learn all the programs in a short amount of time. It's pretty incredible how many programs are available that I didn't know before, and I'm learning them. And it's a good time that if you are looking to buy something, to seek out a loan officer, whether it's us or somebody else, to talk about different programs available.
And it's absolutely essential. Actually, one of the things I always tell people when they're buying real estate, whether that's a condo or a home, is you have to use, legally you can use whoever you want, but it's a near requirement to use a local lender if you want a smooth transaction. A lot of people don't realize the idiosyncrasies associated with, buying here on an outer island. Maui has very different processes than Oahu and Kauai. So, they don't really understand how our timeline works, how our condominium classification works, how there might be some little idiosyncrasies with a particular place, or how their insurance is, or what the current status of the association's at. All that stuff is something that really is required using somebody who knows the island, knows the complexes, knows the neighborhoods, and can really apply the appropriate loan program to make it work. I've had so many people, say, "Oh, no, I'm a partner in the bank." or literally I'm a co-owner in the bank. And I'm like, trust me, if you do this, you're going to have catastrophic problems in the loan process. You really want to go ahead and use a local lender. And they're like, no, no, I have it. And then by the end of it, I literally have this on one of my endorsements on my webpage. They said, if Clint says use a local lender, use a local lender. So while I always recommend Axia, and especially Byron, because he's the guy and knows the island, you know, you just, you're going to really have a much smoother transaction.
Yes,
So
for sure.
I've been selling on island for 20 years, and I really want to work with people who have a ton of experience. Byron, can you tell us a little bit about your history?
Uh, well, previously, before being in the mortgage business, I'd worked with Betzel Brothers Development and Sales for over 10 years, and then decided to get into the mortgage business because I know the real estate side, the development side, and it's been a great transition. I enjoy it.
And one of the things, of course, you do quite a bit of volume when it comes to the loan process. And one of the reasons I've really been happy with you guys is the fact that you have a good segmented system. So whenever, you know, I'm working with you and getting paperwork to you, with the busyness of the market right now, I'm seeing a lot of unforeseen delays, and
Yes.
the loans that I've been pushing through with you has been very smooth. I'm very happy with the process. So thank you so
Thank you.
much.
Thank you.
Um, that being said, one of the most important things, of course, with a loan is you want to make sure you have a good credit score. And Byron, of course, can give you some general tips about that, but there's also specialists out there. So again, this is Clint Hansen with Maui Luxury Real Estate, and this is the Maui Real Estate Radio Show. Here I also have Byron Yap with Axia Home Loans, and we have special guest today, Jason Hall with Rapid Rescore Credit. You can go to his website, rapidrescorecredit.com. Thank you so much for joining us today, Jason.
Thanks, Clint. Thanks for having me.
My pleasure, my pleasure. So one of the things, you know, when you get a loan, you have, of course, a large portion of those payments go towards your actual interest. So over the life of the loan, it's almost like half of it that goes to that. And a lot of people kind of get perturbed by that, and they're like, all this interest, it's you know, mind blowing, but it gives you the financial capability of purchasing it. And one of the important things is the amount that you pay in those interest over time dramatically decreases, because the portion between the principal or the actual loan that gets paid off compared to that interest, you know, the volume difference changes. Usually around 17 years is the even point, where half is going to, you know, your mortgage and half is going towards interest. So right around that for a 30-year amortized loan. Now, in order to get that better in your favor, the two best ways, of course, are to, you know, have a lower interest rate and B, put more money down. And one of the things that affect the risk portfolio is, of course, your credit score. So it's, you know, for the amount that you need to put down to what interest rate you get, the ease of getting a loan, having a good credit score is something you should be thinking out years in advance. And so Jason, can you tell us a little bit about your program and what you do?
Thanks. Well, first and foremost, what I typically like to do is get a copy of the 3 bureau credit reports from the client, whether it's from the lender or they can go pull it online. And I'll go through and do an audit on all their credit accounts, the good, the bad, and put together an action plan for them prior to them actually enrolling in any of my products or services. Because I want to make sure that I can help them, B, they're financially capable of kind of helping themselves, because a lot of times people have debts they need to pay down their credit cards to a certain percentage to maximize their credit scores before they go and apply for the mortgage. So step one is to audit the report. Step two is to give them the action plan. We discuss the budget and then put those into play, and then they'll have their task list of what they need to do over the next few weeks, while I'm working on, if they have derogatories, we need to dispute, you know, collections they may have paid and settled, and we might be able to get those deleted through a dispute process. Or they can get a pay for delete. If they settle the account, the company agrees to delete the item off the credit report. We have a rapid rescore process that I've adapted from my mortgage experience, where we can actually expedite that data change so that it'll speed up the score increase, so they don't have to wait 6 months or a year for a credit repair program to work in their favor. And that's the way I've designed my product, is to get it done quickly, because 99% of my clients, they're trying to buy or refinance their mortgage. They don't want to wait 6 months or a year for a typical credit repair to happen. This is a fast process.
So explain a little bit more of the terminology, like what is a derogatory?
It's really a negative item. It could be a 30-day late. It can be a credit card that's over the limit. That's deemed as a derogatory mark. You can have a collection account charge-offs, bankruptcies, anything that can detract from your credit rating or show an issue with payment history, things of that nature. So that's typically what the DROGs are categorized.
So one of the things when I was talking, when I first started out, I was 18, 19 years old, going to college, and I actually had my real estate license. Now I was learning, good credit versus bad credit. When you look at the reports and you see some of the numbers, can you explain a little bit of those differences? Like, getting a loan for, a motorcycle might be different than for a more fixed asset like a house.
Well, the three types of credit that you can have on a credit report are mortgage, installment, and revolving credit. And the revolving credit are your credit cards, your department store charge cards. The installment credit or your motorcycle, auto loans, signature loans, those are installment credit. And then of course the mortgage. And the way that the FICO scoring models risk grade you is the more diverse your credit profile, the better it is for your credit rating. So if you have two credit cards as opposed to a credit card and a motorcycle loan, the person with the two credit cards is going to have a lower credit rating. They have the same account numbers, two accounts, but because you have a diverse credit profile, you're actually going to have a 30, 40 point higher credit score than it would be if you just had one type of credit on your credit.
So I'm going to call my wife and I'm going to tell her I also need to get a motorcycle, not just
Okay.
not just these credit cards. No,
Yeah.
we're not paying for
Sure. I don't know how she'll like that, but she'll say just get a personal loan and buy her something nice.
There you go. All right.
Now, with the credit, Jason, what is, I've always heard what is the maximum like credit score someone can have? I've heard different varying numbers. Is it 825, 850? What is it?
Great question. The scoring model that FICO has implemented for years is 300 to 850. Now, what's happened since 2006 is the TransUnion, Experian, Equifax, they came out with their own brand of scoring model called Vantage. And Vantage initially was, I think it was like 550 to 900 when it first came out, and it got real confusing for people. So what they actually is they mirrored their scale 300 to 850, just like FICO. And the problem is Vantage risk grades your credit differently than FICO. And so you can go to Credit Karma and you'll look at a TransUnion Vantage score at 700, and your mortgage lender pulls a FICO 542 and it's a 650 or a 620. And so people that are using these credit monitoring sites, they're not diving down in the details and recognizing that there are literally dozens of different credit scores out there. And so that's where it gets real
great. That's going to make it simple.
Yeah, it's interesting you say that, because I have people all the time calling me saying, hey, my discovery credit on my app said,
Right.
700. Why am I at 650? So that is not a hard pull, right? That they're doing, right?
No, it's a soft inquiry, your discovery, your Capital One, those apps that will show you the credit card FICO score or a variation of whatever scoring model. That's where it gets really confusing, because you can have all these different apps that they'll show you different credit scoring models, and most consumers just pick the one that's the highest and go, oh, look at me, I'm a 700. And then they go apply for the mortgage and they're a 650, and they get embarrassed and they get confused and upset. But the more information that they know prior to the mortgage application, the better. And that's why I go through these consultations with clients after I review credit reports and prepare them. Look, these scores may be different from what you're going to see with your mortgage lender. And we can source the data through a couple different websites. myfico.com, credit.com will show us the mortgage FICO scores. if we want to see them. But if they've already had the lender pull credit, their scores are too low, we need to troubleshoot their problem so that they can get back in front of the lender with a better credit score.
Now, I've noticed sometimes on credit reports, I'll see, collection accounts that people don't know that's there, like a $25 for a doctor,
Right.
or, and it goes nowhere. And I see on your website, it says collection account settlement negotiations or strategic letters. What can you do to help the customer if they have that on their credit report?
Couple things. If they don't know it's there, they don't know what to say, they don't know who to call, I can give them that information. I can prepare them for the conversation, what to say, what not to say, who to talk to, and what to ask for. If it's a $25 collection for, they went to the hospital or the doctor, some lab work didn't get covered by the insurance and it goes to collections, they didn't know about it, that one $25 collection probably has lowered their scores 60, 80, 100 points if they had perfect credit prior to that. So the derogatory is not the drop in the score isn't indicative of how much the dollar amount is. It's the fact of a collection, a bill that you didn't pay went to a derogatory mark on your credit and it's tanked your credit scores. And that's the biggest frustration that I talk to a lot of people is they miss, one small little bill and it's hammered their scores. For example, a friend of mine had perfect credit scores over 800 here on Maui. I've known him for a long time and he knows what I do. And he was in a panic. His scores went from 800 down to in the 600s because he had a credit card that he doesn't use. They charged an annual fee that he didn't remember or realize, and it didn't get paid. And so his scores tanked over 100 points. I had him say, look, just call the bank and you explain the situation. And we got it corrected and the scores went back up over 800. So
Wow.
one minor mark on really good credit scores, it can hammer your credit.
Man, I got a VHS that's due at Blockbuster, like way overdue. I think I'm in trouble.
Right.
One of the other things that I've noticed is like, would you recommend, okay, say I just got out of college, I want to build my credits, what do I do? Do I apply for 10 credit cards? What are some of the basic things that I should be starting as a young person?
Basic things, there's a process called piggybacking or authorized user accounts that you can get on with your parents. Your parents can add you as an authorized user to their long-standing credit cards as a young person. That's what they're designed for, is to get a leg up in credit, number one. Number two, credit card companies, they have all different tier credit cards designed for students, young people just starting off in credit. A lot of credit card websites like creditcards.com, they'll help guide you through that process of which cards to apply for. You'll probably get approved for and which ones not to. But a good mixture of credit, get 2 or 3 revolving credit lines, get an installment account. There's credit builder loans out there to help you apply installment credit to your credit reports to help diversify those accounts. So at least have, 3 or 4 open and active trade lines to get a good foundation.
Now, when I get those active trade lines, should I be paying them off monthly? I've heard different things from different people, like get a credit card, charge your gas, and pay it off each month.
That's typically what I advise. I mean, the problem that people have with credit cards is they've put themselves in a bad spot with them in the past. They treat them as income and they max them out and then they make the minimum $20 payments for the next 20, 30 years. And
Ooh,
the
ouch.
problem is, well, it's a compound interest and you don't go anywhere fast. But the reality is you need to respect the credit cards and use them as credit, not as income. So if you charge something up and you can pay it off in the next 2 or 3 weeks, then that's fine. But if you need to max them out and never pay them off for years, that's a problem. So yes, use your credit, that's fine. You can max out your credit cards. You just need to pay them down or pay them off a couple days before the next reporting date, which is typically the billing cycle.
So, and a big thing about credit cards is they compound daily. They don't
Yeah.
compound on like a monthly or annual basis. So
Exactly.
the actual interest rate is dramatically higher.
Yeah.
And, as that interest rate builds, it's, one of the best investments to have a credit card company because of those high interest rates.
Yeah.
So while it may help your credit score if you pay off those, make sure that you pay them off. And I've also heard one of the things that's really important to do, always pay more than the minimum amount, even if it's just $1, because that'll help too. Is that true?
I mean, yeah, it goes to knocking down the principal balance like it would be on a mortgage loan. You know, add an extra $100 to your mortgage payment each month, and it'll pay it off in 16 years or whatever the math calculates out to be. But
Oh, huge time. Yeah,
paying
absolutely.
it down is important, obviously. Um, what I've found with the FICO scoring models is you can actually, the sweet spot for credit utilization on credit cards is about 5 to 7%. So if you leave a 5 to 7% balance on your credit cards at the time it reports to the credit bureaus, your scores will actually be higher than it would be if you paid it off down to zero. And all this information you can find on the MyFICO website on their top performers, at least six open trade lines. Their clients with 740 plus credit scores, they use that 5 to 7% utilization to their benefit. So all this information, when you read your credit score description, what's helping your score and what's hurting your score, if you take note of that and use that to your benefit, because most people, they pull their credit, they look at their credit scores, and that's it. But these websites and these scoring models, they'll tell you what's wrong. It's just you need to take the time to recognize what these issues are and address them.
So should we check every 5 minutes, or how exactly does dinging your credit affect your credit?
You can well, it depends on how crazy you want to drive yourself.
Yeah.
You can check your credit. Most websites will let you check once. I know Credit Karma is once a week. Some sites are daily. Some sites are every 30 days. The reality is your credit scores can change daily, and they change based upon when you pull your credit, that snapshot of if there's information that's changed on any account, if a balance is changed, if a payment's posted, if a derogatory is hit your credit report, your scores can change a lot. Are you paying attention to those scores? And are you pulling your credit daily to drive yourself nuts? Or are you making your payments on time? Set up credit monitoring. You get these alerts if there's a new credit inquiry, if there's a new derogatory, you'll get an email from the credit monitoring site. So you'll know that that there's something that's changed. But if you don't need your credit right now, or if you don't think you're going to buy a house or apply for any credit within the next 6 months to a year, then I wouldn't drive yourself nuts. But yes, you need to keep an eye on things. These credit monitoring sites will do that for you. They'll alert you if somebody's pulled your credit, or if you got a new account reporting or something of that nature.
Is it though? I heard maybe it's just because if it's a hard pull, or like if you go to get an auto loan and we're just talking to them, if they do a hard pull, how does
Yeah.
that affect your credit?
Great question. A lot of people get hung up on hard inquiries, and there's a difference. There's a soft inquiry or there's a hard inquiry. Hard inquiry is if you apply for a loan or for a mortgage or a credit card. A soft inquiry is you pulling your own credit yourself online through monitoring sites. There's other sites that will do like a soft pull just to kind of see how you're performing on other credit accounts. Some of your current banks will do that for you or on your credit. It doesn't reduce your credit score per se. But as far as the hard inquiries go, you're allowed up to a certain threshold annually, say 5 hard pulls every 12 months. Now, the inquiries are listed on your credit report for 2 years, but they only impact your scores for 12 months. The other thing too is the FICO scoring models allow you to shop for credit inside of a short window, usually about 4 weeks. So if you want to apply and shop your mortgage rate through different brokers over the next few weeks, you can do that, and they'll list the inquiries, but it's only going to count against your scores as one hard pull. But if you apply for a bunch of mortgages this month and a bunch of credit cards and an auto loan and a motorcycle next month, that'll start to compound, and that will have a significant impact moderately to your credit scores. And hard inquiries are only 10% of your FICO score, so they're not a huge compensating factor. Your credit utilization and your payment history, those two categories make up 65% of your FICO score. So inquiries, they're not a huge score killer, but if you over apply it, it can become a problem.
Now, say, I've run into people that are younger people, maybe they ran into a bad credit event, they had a bankruptcy when they were younger. How long does that stay on their credit report, or, some kind of major event, how long does that normally stay on the credit report?
Typically, it's about 7 years. If it's BK, depending on if it's a chapter 11 or 13, it can be 10 years. Back years ago, I think it was 2017, the IRS tax liens no longer report to your credit, judgments as well. So those are a couple of things that no longer are listed on TransUnion, Experian, and Equifax. LexisNexis, that data might be there, but it all depends on, if your lenders are pulling that. But typically it's about 7 years. And that's from the last payment date, plus 3 months. So it's 120 days late, starts a 7-year clock on a derogatory account falling off your credit report.
Does that automatically come off, or do I have to, like, what would I do as a consumer knowing that, let's just say for argument's sake, on the 7th year, do I check my credit and get it taken off? How would I go?
It wouldn't hurt. Typically they roll off on their own. It's very seldom that I've seen something past the 7-year mark on the thousands of credit reports I've seen over the past 20+ years. So they're pretty good about getting the stuff off of there when it's time.
You were saying that there's top performers as examples. Are you telling me there's some sort of, credit Olympics? Have you seen some amazing credit scores before?
I have. I mean, I'm a data guy. I dive down into the details on all these credit reports and all the information shared by FICO. I mean, they wrote the book on their scoring models, and you really need to dive down into their information. And they'll tell you, look, our top performers are doing this. They're at 7% utilization. They have 6 accounts that are actively paying on, and they'll tell you what you probably should be paying attention to. So yes, there is kind of, in their eyes, their top performers, which we all should probably pay attention to.
I was actually have a few friends, and credit score became kind of a lifestyle for them. They didn't game the system, but they gamified it. So they basically rewarded themselves by building their credit, and they went through a process. And I was actually quite surprised. They're previous to their current score, it went up quite dramatically, and it came part of their lifestyle in addition to and reading the books and fire investment strategies, as well as building their credit was an absolute game changer for them, and gave them the power to build home, and something that nobody does when they're actually have a rental, and they normally will buy into a condo and then go from a condo to a home, but they actually went from a rental directly into a house that they were building, which is a very hard process, and they were able to accomplish that by basically making it a focal point of building their credit and actually building their house one loan at a time.
Yeah. And, credit, you're right. It has to become a lifestyle, because if you don't have the foundation of respecting credit for what it is and using it to your benefit, you're given this opportunity. It's up to you if you want to capitalize on it or screw it up, if by not paying attention to what you're supposed to be doing, which is make your payments on time and keep your balances low on your credit cards and just pay your bills. I mean, it sounds easy, but life happens. We get sick, get divorced, job loss, whatever. Yeah, life happens, and that's why it can be
Medical
cyclical
emergencies
sometimes.
that can always
Exactly.
happen. Yeah.
Exactly. You don't prepare for that sometimes. So, it can happen. You can get back on track. It's just going to take some work.
One of the things I'll go, sorry.
No,
One
absolutely.
of the things I see, like, on people is they'll have a collection accounts and they don't know how to go. Do you help with that, like negotiating, getting it
Yes.
fixed? Is that a service you provide?
I do in certain scenarios, if they don't have the time or the wherewithal to handle the negotiations, I can help with that. We'll get on a 3-way with the collection company, allow me to communicate with them directly, and it can be of benefit. I've helped clients save thousands of dollars off of their collection bills, because you have to be patient, you have to be nice, you don't take it personal. They're a business and they're there for profit, and when you approach them in the right manner and give them what they want so that we can get what we need, then it works out as a mutual beneficial conversation. But a lot of people get upset and they get their feelings involved in the communications, and those hang up on them or whatever. But you just treat people like you want to be treated, and usually can get what you want mutually.
So having that process and doing the rapid rescore for your credit, no, I always come from it as being something more of a process over time, like a lifestyle choice.
Right.
But with rapid, rapid rescore, tell us some of the stories or war stories of,
Okay.
being able to turn somebody from a, 600 or to a nice higher, more attractive score.
Great question. So technically what a rapid rescore is, it's a data change quickly. And as I think I said before, is your accounts report every 30 days, usually at different times of the month by different accounts on when you open them and when they report. Easiest example of a rescore, somebody pays down their credit card, we can get the balance updated at the credit bureaus in about 7 business days instead of waiting for the next reporting cycle, which can be 4 weeks out. Same thing for collection accounts. If we can negotiate a deletion in exchange for payment, we can rapid rescore or get the account off quickly so that it's no longer calculated in the credit ratings. I think it was last month, I had my record score increase, and I've been doing this a while. 231 points is what we were able to achieve on a score increase for this client. And it was, sometimes we get kind of these perfect storm, scenarios where everything kind of clicks. He paid down his credit cards, we rescored those. It was a Wells Fargo, I can't remember if it was a mortgage account. I think it was a mortgage account that they misreported, and we were able to extract that 30-day late off his credit report. That's why his scores went from, I think it was the mid 500s to low 7s in a few weeks.
Wow.
And so
That's really
there's
impressive.
a million scenarios out there. There's stuff that can happen perfectly, some moderately. I mean, it's kind of a moving target in a general sense, because we're dealing with 3 companies, TransUnion, Experian, Equifax. They have their own verification processes. They have their own timelines generally. And so it's not just one report, it's 3 reports that we have to deal with on everything's in triplicate on what we do and what's being reported that we have to get changed. So it's a little bit more technical than most people think.
So how does, I was a little surprised because when you were saying earlier, sometimes it's better to have a diverse loan portfolio, like, a vehicle loan, house loan, credit card loan, showing that those are up to date. But what about something along the lines of debt consolidation? So I'm assuming that really comes more from removing, debt from really high interest compounding loans like credit card and getting something tied up in a more fixed interest rate, and taking that loan and paying off all that more compounding interest by comparison. How have you seen that used as a tool?
That is a great, if you can do it. And that's the thing is, when you're in a position where you've got your credit cards maxed out, you have a couple of installment loans out there, and you apply for a credit loan to pay down debt, sometimes banks are a little bit weary, because when you take that money and you pay off the credit cards, now you've moved that over onto an installment loan with Bank A, and now you have all these credit lines, use revolving lines freed up, which will boost your credit scores by all stretch. But now it gives you access to that credit again. And what can happen is people go back out and they'll just max out that, and it's just this
Vicious
round
cycle.
robin,
Yeah.
vicious cycle to a degree, but done the right way. If you can move that debt off of the revolving into installment and free up those revolving lines and not max them out, your scores are going to go through the roof, because now you've lowered utilization on all your credit cards. Yes, you may have added in a new installment loan, but utilization on your revolving credit, so 30 your credits or 30% of your credit rating is based upon what kind of utilization is on your credit cards. If you have maxed out, your scores go down. You pay them down, your scores go up. It's pretty basic, but when you move that off the revolving category, it can have a significant increase to your credit rating.
That was one of the things that I did before purchasing a house. Was whenever I would get the opportunity, I would call my credit card company up and I would try to increase my maximum amount
Exactly.
on my credit card. So
Yeah.
typically when you get a credit card, their max is about $20,000. And then if you call them, they're usually more than willing to lend you more money or increase your, risk portfolio by saying, hey, instead of 20, let's make it 25, and then
Right.
30 and 35. And if you edge up that amount, we're normally obliged, and that's, I'm assuming, going to help your credit score.
It will, because let's say on a $20,000 credit card, you're constantly using $8,000 or $10,000 a month. So you're running about 50% utilization. You call Chase and say, hey guys, can you bump me up to $40,000? And you're still only using the 8 or 10%, 8 or $10,000, that lowers your utilization, but you've not paid down your balances. And so moving those numbers to your benefit, you can do without paying a penny. You can actually raise your credit scores by increasing your credit limits.
Oh, so it doesn't hurt to ask.
What would you recommend, or what would be the best advice you would give to a young person? You know what I mean? Is because the credit goes with them forever. A lot of people don't realize that, and sometimes they're afraid to look at their credit. You know,
Yeah.
what would you recommend to a young person starting out? You know, I know we talked about some credit lines, but should they, should they keep applying? You know, what should a young person do to, say, in 5-10 years want to get a house or get other things? What would be your best advice to them?
As far as the revolving credit, those are the only credit lines that will remain with you for forever. And by maintaining those and keeping those open and active and in good standing, that's one of the better types of accounts, because the age of your credit is important as well. And so by getting a couple, 3 credit cards in your name and keeping them open and active throughout your credit life, that's very important. Your installment loans, those are going to close, those are going to get paid off, and you may need to replace those. But as far as, keeping accounts open and active as long as possible, your credit cards are the best route to go. You can always trade up and get, one with better rewards or points or cash back or whatever down the road, but it's important to keep those accounts as long as you can.
Mm-hmm. And I've noticed that you've helped the gamut of, I've sent people to you, quite a bit of people, and they've all come back with good reviews because, they thought they were in a position they couldn't do anything. And pretty much to your word, within 6 months, maybe on the worst case a year, but I've seen on the average 6 months where they've been able to do something with your guidance. And I'm guessing that has to take a lot of, the customer has to want to participate too, right? It's just not like, hey,
Absolutely.
Jason, you fix it for me.
Right. No, and that's the important thing, is this is a team effort. This isn't something where I say, okay, pay me money and I'll fix your problems. This is just not how it works. And there's plenty of companies out there that will tell you that. Pay us, don't pay your bills, we'll fix your credit, no problem. They're out there. Well, exactly. And they're out there by the boatloads. But the reality is like, if you have the wherewithal, you have to participate. That's why I give them an action plan. If they fall off rail 2 months down the road, I say, well, let's go back to the action plan. Did you do 1 through 5? Or you only did 1. Okay, well, what about the rest of the stuff? We need to stay on track if you're going to have really good credit. I can't do this by myself. This is your credit. You're the only one who can make your payments and keep your balances low and settle your collections and everything that I've outlined. That's part of what I offer my clients as a consultant is, look, if you don't blame me because your credit hasn't gone anywhere because you haven't done what you're supposed to do. This is a team effort. And, there's no I in team. Everybody has to be involved.
Darn, no magic bullet. I can't just pay money.
No,
I'm a little disappointed.
yeah. No,
Sorry, goodbye. No, just kidding. I'm sure you've had a few conversations like that.
Well, I think that the other thing most people appreciate is I tell them how it is, upfront and honest. Look, if I can't help you, I'm going to tell you, and I'm going to tell you why. And I'm going to tell you why you've wasted money on credit repair in the past is because you haven't paid your bills, in a nutshell, and you don't have the capacity to do it. Save your money. Come back to me when you're ready. It doesn't do us or anybody any good to pay me for something that's not going to work.
Do you ever recommend to people going bankrupt, like 11 or 13?
I tell them
to talk to
their
accountant.
talk to a BK attorney about that. But this is just off the record. Yeah, I mean, if they're buried in debt and there's no end in sight, yeah, maybe you might want to do that or look into it at least, so that when you get the BK behind you, you can go through the BK. It doesn't kill your. I've seen clients with the 700 credit score 12 to 24 months outside of a bankruptcy.
Wow.
It's all about what you've done since then. So the way that the scoring models look at derogatories, the older the derogatory, the less that's impacting your credit rating. So what's happened to you 2 years ago is not indicative of what kind of credit risk you are today. And so if you can establish new credit, keep your nose clean, make your payments on time, your scores are going to go up. It's just, you need to put distance in between yourself and the derogatories.
How does, when it comes to those loans, I mean, how exactly a student loan qualified or classified, when you look at it. I mean, obviously it's important to have it paid and up to date, but in regards to its effect on a credit score, is that a positive as long as it's getting paid down, just like any?
Well, student loans they're kind of a weird animal.
Mhm.
Well, because they're going to look at, how much the loan was for, what the current balance is, which sometimes your balance can be higher than the original loan amount, which can look bad. Um, they can go in and out of deferment, which would mean that they're not reporting payments or activity on active payments to your credit. And so student loan debts, they're kind of a mixed bag as far as the positive and negatives to your credit. It's all, have you been paying on them? Are the
Yeah,
balances coming down?
just
Those
like any
things.
loan.
Exactly. And a lot of people use that deferment as, look, I'm going to enroll to get out of paying it because I don't have money, or whatever the case may be. But student loan debt, they're kind of weird accounts on credit reports. The easy stuff are the credit cards, the installments, and the mortgages, but student loans, those will follow you around forever.
Yeah. And you can't just discharge those with a bankruptcy either.
No,
Those are one of those things that follow you forever. So
yeah,
make
like
it
a
a
tax.
priority to pay those off.
Absolutely. Yeah.
Well, that being said, how long have you been in business for? Can you tell us a little bit about yourself?
Great question. I've entered into the mortgage industry in the late 90s as a young man, as a signing agent in California. And I'd fly over the Western United States with a bag of loan docs and go straight. This is before cell phones and all that fun stuff. And I'd have the Thomas guide and I'd go drive around and look up addresses and go sign loan docs as a notary. And then got my real estate license and started as a loan officer, and was in the business through 2008, 2009, when the market shut down with all those subprime loans and the foreclosures. So that was about the time I learned the business of credit consulting and repair and rescoring, and been doing this ever since.
Yeah, it was
And you're
always a
located on
mission.
Maui, right?
I'm on Maui, correct?
But you handle the whole US or
Yep, nationwide. I'm up at 3 a.m. doing emails and texting East Coast, and work my way west as the day progresses.
Why'd you move to Maui, huh?
I was in California for 30 years and ran the gamut through the mortgage business, and had friends over here, and they took us in and allowed us to kind of enjoy the island, and got our self rooted here and haven't left. So we
It's
love
only
it.
the
Plus he
best
foils
possible place to live. So
Clint, plus he's at the beach all day in the afternoon.
Oh, love it.
no, you're a hard worker. This is what I'm hearing here.
Yeah. I'm up early, and usually around noon is I've put in a good solid 8 hours or so.
Oh, fantastic. And also, of course, people are normally building their credit first thing in the morning before their workday starts and all that kind of stuff. So
Yeah,
getting it out there, getting the advice that's necessary. Um,
absolutely.
that being said, how have you seen with the changes to the Fannie Mae and Freddie Mac process and the loan restrictions, how have you seen things change since the subprime crisis?
They keep raising the bar. I mean, which is kind of good for my business to a degree. Even pre-pandemic, you could get into some loan products all the way down to 550. And then my understanding, they've really tightened up their credit criteria, whereas some FHA products, from what I understand, people are getting in at 580 or 600. Some of those are creeping up to 620 or 640.
Yeah.
And Fannie Freddie products are getting even higher. So
Mhm.
it's becoming more challenging, and it creates, more business for me. But the reality is it's becoming more difficult credit wise for people to get into loans. And I read some article a week or two back is, 70% of the Fannie Freddie loans made this year were 740 plus FICO
Oh,
scores,
wow, that's a great score.
which is, and that's 70% of their approval. So it's really, I think it's left some people out of the market when it comes to getting approvals.
What do you think the future is for, I mean, credit and building? For the thing that I'm noticing right now, at least, is there's so much equity built up in homes and condominiums. People are coming with more cash down,
Right.
and that seems to be backed up by what I'm reading, that we have more equity in, the industry than we've seen in almost, 30, 40 years. So that equity, meaning like the loan in comparison with the value of the home, is at a smaller ratio compared to what they've been on average. So seeing this, it seems to be becoming harder and harder for initial people to break in.
Yeah.
And so I'm just kind of like, building that credit score is such an essential piece of the puzzle so that you can get those, low interest loans, getting in there with 3% or no
Yeah.
money down. So how do you see this evolution going? I mean, is it just simply going to be, more hurdles to jump over, more data coming in? Maybe they're gonna be tracking your Bitcoin.
And yeah, I don't know. That might be better for Byron to answer. But as far as what I've seen, as far as the on my side of the fence is, um, you're what I've noticed is Experian and some of these other credit monitoring sites, they created like this Experian boost where you can tie your utilities into your credit reports to help boost your credit scores. But what they don't tell you is the Experian boost and some of these other boosting type of things that they've created, they're not recognized by FICO 5, 4, and 2 in mortgages. And so what might increase your credit score with Experian or FICO 8 or Experian Boost, it's not relative to your FICO scores used for mortgages. So there's a lot of confusion out there, and they're just adding fuel to that confusion by offering these products and services that aren't beneficial for my clients and Byron's clients typically. And it's confusing, and it's just, they're making it worse.
So calling it a credit score might not necessarily mean it's a real credit score.
Well, they're all real. It's all relative to what you're applying for. And that's the part that they
Which
don't
loan?
explain. You know what I mean?
All right, that makes a ton of sense. So when somebody's going to go to rapidrescorecredit.com, your website, what do you think that, obviously they're mostly going to probably be looking for contacts and email. So what is your, first of all, email and phone number that you recommend people giving you a call, or, sending you an email?
Email address is Jason, JASON at rapidrescorecredit.com. The office line is 949-505-9971. Obviously, it was my California number that I paired back, brought with me here, and I've had it for years, so I left that. Or they can reach me on my local number. My cell is 808-633-3767.
All right. Thank you so much, Jason. I really appreciate all your
Thank you,
time.
Matt. Yeah.
And definitely continue to chime in here because we got about another 7 or so minutes of the conversation to go before the end of the show.
Okay.
But wanted to go back to Byron and talking about how crazy the market's been. So one of the biggest hurdles, I have been trying to figure a way to overcome is the fact that, we have all these properties in escrow, some of the highest numbers we've ever seen. I mean, normally Maui is around 550 escrows between condos and homes. And now we're well over 700. At one point, we were over 8. So those closings that are, yet to happen are really the current price in real estate. But those went into escrow a month and a half ago.
Yeah.
Sometimes even more than that, depending on the type of loan that they're pulling, and they're not able to count those as comps. So as the fervor of the market happens and these new closures, as soon as you see one of those new goalposts get set, then you see a bunch more go pending right immediately after. So how, what are some of the things that you've seen for these appraisal processes? I mean, it's A, very difficult to get an appraiser, and B, they have, so much of an uphill battle to try to get things to appraise, even though, they might even be in escrow under value. It's just they're going off of yesterday's prices, not today.
Yes, and that's we're seeing that a little more. It's a little more prevalent with financing, is the concern of purchase price versus the appraised value, because the appraisers are only using properties that closed. Where it's a challenge we're running into daily on some loans where, like you said, the other closings don't substantiate the new price that this house is going for.
Yeah.
And that's a good thing. I think what we're going to do is I'm going to talk to an appraiser and have him on so we can kind of ask those questions that he's more of an expert in, and I'm working on that.
Yeah, it can definitely be a juggle. What they're going through right now is
Yeah.
pretty tough. They're getting paid well though, that's for sure.
Yes.
There's
Yes,
a
they
lot
are.
more business to go around, so that's one of the positives. But of course, the big toughie is the fact that they've got these hurdles to overcome. So
Yeah.
that's again one of the reasons that, as a real estate agent, I get a listing that comes up, and the loan is going to be one of those things. And sometimes I'm putting into the contract like, hey, if it doesn't appraise, you're going to have to come up with the additional cash. I'm straightforward. I'm like, look, this place would appraise, 50,000 under what we're in escrow for, but we have 3 offers that are that same 50,000. One of the big pluses of choosing this particular person is like they have the capability of making up that additional $50,000 difference.
Yeah.
So when
Yeah.
that happens, when somebody has a loan that misses the mark, what are some of the remedies?
Well, basically, the banks look at it is they'll finance, everything is based on the lower of the two, either sales price or appraisal.
Mhm.
And if your appraisal comes in lower than your sales price, I mean, the options are A, go back, renegotiate a lower price, which probably won't work in
Never.
the soft
Yeah.
market. B is come up with the difference to offset that between the appraisal and the sales price, or if they don't have the funds, is to cancel the transaction. It's a busy area that appraisal has been affecting a lot of loans right now. The appraisals have. So
Mhm.
some of these buyers have had to make that decision. You know what I mean? Is, hey, there's other homes in escrow that probably higher that will close later. Do I buy this now because I'm setting the precedent for the next sale and have to bring up those funds?
So if you have additional funds, if you're one of those lucky people that have a fair bit of liquidity, what are some of the ways that you can help your interest rate as opposed to just simply, calling rapidrescorecredit.com and working with Jason? Say you've maxed out your credit score, and you still want a lower interest rate because that really compounds over time.
Yeah.
Are there some other options?
Well, the options are a customer can pay what we call upfront points to buy the lower rates.
Mm-hmm.
Meaning if X rate is 0 points and a lower rate might be 1 point. 1 point would represent the loan amount. So if you had say a $500,000 loan, it may cost you $5,000 one time at closing to buy the lower rate. So people got to, what they'll determine is, does it make sense for them financially, putting up the money up front to get the lower rate, or should they keep the money and just take the little higher rate?
And it's really only going to make sense if you're going to be holding the property for that period of time or longer.
Yes.
So if it takes 5 years in order to, make up that difference, and you're going to be living in it for 7, go ahead and pay down the points if you have the additional cash.
Yes.
And it's especially great to do that if you're going to be living in the home for 10, 20, 30 years, then the compounded effect associated with the lower interest rate is massive over time. So the longer you'll be in a property, the more it makes sense to pay down points.
Mm-hmm. Yes.
Are those points tax deductible anymore, or is that something that's changed?
I'm not 100% sure. I think they'd have to consult. Best thing to do is consult with the attorney, their accountant, because each person's going to be different with the new
Sure.
tax, the Trump tax changes, with
Okay.
mortgages and things like that.
Right.
I believe they can write off certain things, and that they're going to be most likely talk to their accountant, figure it out.
Right.
Well, fantastic. Thank you guys so much for coming today. It's always very illuminating to learn all the ins and outs of the mortgage industry, as well as some of the tools available like rapidrescorecredit.com. If you guys could just reiterate your contact information. My name is Clint Hansen with Maui Luxury Real Estate, the Hansen Ohana. I've been selling real estate on island for 20 years now, and it's a family industry. My family has had their license significantly longer. My mom's over 40 years now. And most people know us through MauiRealEstate.net. That's been around since 1997, and they love our webcam. You can actually go see people chilling on Charlie Young Beach and listen to the waves crash. So tell us a little bit about your websites and where they can reach you.
I'm with Axia Home Loans, Byron Yap. The contact information, my direct cell phone number is 808-280-3491, or via email at Byron, that's BYRON .Yap, YAP, at AxiaHomeLoans.com.
And Jason, one last time.
Sure, no problem. Jason Hall at rapidrescorecredit.com. You can reach me direct through the office line 949-505-9971. And of course, my direct cell is 808-633-3767, located here on Maui.
All right. Mahalo and aloha. Thank you, everybody.
Thank
Thank
you.
you.
Aloha.